Welcome back to part 2 of the textile question. And in this part, I am going to explain the journal entries. In the previous video, I explained the steps to perform for general loans as well as the calculation of the interest earned. So for the journals, we need to do the journals for 2 years. So I'm first going to show the journals as for 30 June to the year ending 30 June 2015. The first journal that we are going to do, and I think again your timeline is quite useful in this instance, right? So the first thing we need to do is that we need to recognize the loan that was received, and thereafter we will have a recognition of the different time spans and the progress payments that go with it. And then at year end, we will recognize our interest and as capitalized or not capitalized, and then also the interest earned. So let's use this timeline. So the first thing we need to do is we're on 31st of March. So 31st of March 2015. And here we obtain a loan. So I'm going to say we pay it into a savings account because they said all the excess funds are in a savings account. And then I'm going to say I credit the general loan. Please note how I do not account for the bank overdraft, because the bank overdraft is not recorded through a general journal entry. We just make payments from the bank, and then at the end of the day, we will record a negative bank account. That is what will happen. So for the savings account, we are only going to account for the general loan, 400,000. Right. Then the second date that we have was the 1st of April. That was when we made our first progress payment. 1 April 2015. And here we make a progress payment towards our building that we are constructing. So I'm going to say debit the building, and I'm going to say credit the bank. So here we are using the bank overdraft to pay for it. So if I go back to my question, I told you that the bank overdraft will fund this 200,000, that 300,000, and then 700,000 of this total 800,000 on the 1st of February. So this 200,000 will be the double entry will be bank. However, the double entries for these amounts, the 150s in yellow, will be savings account because the general loan was paid into a savings account. Right. The building amount that we pay towards it is 200,000 Rand. Then we are on our next date on our timeline, which is 30 June. So on the 30th of June, we need to record our interest, and we also need to go and look at our interest earned. So we are going to record the average interest. We are going to record our actual interest, and we are going to record our interest earned. So now you can see from the tables, it's easy to read what I need to account for. So when did the capitalization period start? On 1 April. When did the capitalization period end? It ended on the 1st of May. So I know that the interest that I've calculated here will be a pure interest expense because the capitalization ended there on the 1st of May. That's important. So I'm just going to highlight that for myself in, let's say, what color have I not used? That apricot. So I need to remember this 24,000 is for May to 30 June. So this is an interest expense. So this 4,500 can be capitalized, and the interest entry that I'm going to make is, I'm going to say, out of my bank account, I am paying the total actual interest. And the actual interest is this 36,000. So I'm going to put it as a credit. Then what is the interest that can be capitalized for the building? The interest that is allowed for capitalization is the 4,500. The difference will be my expense. And that would be the balancing figure. Then we also have some interest that we've earned. So I'm going to say I increase my savings account. And I am going to take it off of the building total cost. I'm not going to account for it as interest income. And that amount is this, 3,000 Rand. Right, there we have now accounted for what we wanted to account for. Then I have to go back and see what is the next interval. The next one was on the 1st of August, and this is now in the next financial year. So I must just properly just indicate 30 June 2016. And the first date that falls on our timeline that falls within this interval is the 1st of August. So on the 1st of August 2015, there is a progress payment that I am making. And that is this progress payment with 300,000, which should come from my bank. So it's going to be out of the bank account, I make a payment towards my building. And the total progress payment was 300,000. Then the next interval on our timeline that we need to account for is the 1st of February. And on the 1st of February, we make a payment with 800,000. 700,000 comes from the bank. 100,000 comes from the savings account. So I'm going to say on the 1st of February 2016, I will increase my building. Some will come from my bank and some will come from my savings account. The amount that comes from my bank account is 700,000. And 100,000 will be taken from the savings account. And the total for the building is then 800,000, which is the total progress payment. My next interval is on the 1st of March. And there I make another progress payment. And that is one that should come from my savings account. So I'm going to say building, savings account. And the amount there is 150,000. Right. Then there is a progress payment, which is the last progress payment on the 1st of May 2016. And again, that progress payment is made out of my savings account. And it was also 150,000. Thereafter, we are on the 30th of June 2016, which is the year end. What do I account for? Going back to my calculations, I need to account for the following. All the interest that is allowed to be capitalized. So it's going to be interest up until the 1st of May. So this would be everything except this interval, which is 24,000. It's going to be 1,500 plus 22,500 plus 9,750 plus 21,750. That is the sum of everything, and I'm going to get the sum here of what is allowed for capitalization. So I'm going to account for this 55,500. Let's make that in another color. Can we put it maybe in gray? I need to account for that amount. Then I need to account for my interest that I've calculated, which is my actual interest. And then I also need to account for the interest that I've earned. And I need to account for the interest that I've earned up till 1 May. And luckily there was no interest here in the last interval because we used the last money for a progress payment. So this is going to be the 7,000 plus the 750 and the 750. I'm just going to get to the sum of those three. Thus, in gray, I'm going to have my 8,500. That is what I now need to account for. Right, going back to my journal entries, I'm going to say that there is a portion that's going to go to the interest expense. It's going to go to the buildings. There's going to be a portion which is going to be the pure interest, which goes to profit and loss. And then this is interest that I have to pay. So it's going to come from my bank account. Please note, when there's interest that you are paying, you cannot use the savings account because you never pay something from a savings account. All right, you never pay interest from a savings account. So for the building, I'm going to say I'm allowed to capitalize 5,500. The total actual interest that I calculated was 144. And the difference goes to interest expense. 88,500. I also need to account for the interest that I have earned. So I'm going to say it increases the savings account. And I need to play it off against the cost price of the building. And the interest earned was 8,500. Right, so that would be the entries as it relates to my loans. Something interesting in this question is that they have also provided you with the depreciation method that can be applied. So we can also calculate depreciation for this asset, and we can also revalue it. So let's do that part on 30 June as well. So on 30 June, we now need to go and determine the cost price of the building. And the cost price of this building will be, first of all, the sum of all the loans, right? Sum of the progress payments, basically. Because the loans that we have obtained were to cover the progress payments. And the total progress payments was 1.6 million. So that's the first part that will go into the cost price of the asset, of the building. Then we had to take some capitalization of interest. And what were the interests that we capitalized? It was this amount. And in the previous year, it was this 4,500. So it was the sum of the 4,500 and the 55,500. That gives us 60,000. Then there was also some interest earned that we had to deduct. And the interest earned was this 8,500. Let's just highlight that in maybe green. And then for the previous year, it was this 3,000. So it's basically the 3,000 and the 8,500. So I'm going to say equals minus 8,500 plus 3,000. And that was negative 11,500. So the total cost price is then the 1.6 million. Add the interest capitalized minus the interest earned, and that gives us a 1,648,500, which is the total cost price of this asset. If we are now calculating the depreciation, so I'm still on 30 June 2016, I'm going to say debit the depreciation, credit the accumulated depreciation on buildings. And now I'm going to take this 1,648,500. Just type the 1 properly. 1,648,500 minus the residual value, which was 560,000, divided by the lifespan of 30 years. So this information I'm reading from here. 30 years, and then we started to use it from 1 May. So we will count May and June. It's 2 months in that financial year. And that should give us depreciation of, let's see, this minus 560,000 divided by 30 times 2 out of 12. We get 6,047 and 22 cents. Right, there's also a revaluation that needs to be done on 30 June 2016. So the steps for the revaluation is what? We need to calculate our depreciation. Then we need to write back the accumulated depreciation because it's the elimination method that is used. So we're going to take, in the next step, to revaluate, we're going to say write back the accumulated depreciation. And this is the only accumulated depreciation that will exist on this building, because we've only had this building for 2 months in the current financial year that we've used it for. And we write it off against the building cost. And that would be this total, of course. Right, now we need to go and calculate the revaluation and whether there's a revaluation surplus. So in order to do this, I'm going to say, what was the cost price of the asset? It was this 1,648,500. What was the accumulated depreciation? I was going to minus this amount, 604722, So the carry value of the asset at the end of the year is 1,642,452 and 88 cents. Whenever technology wants to help me, I beg your pardon, 78 cents. That is our carry value. Now, what is the net replacement value or the fair value? It is higher than this amount. It's 1,820,000. Thus, we have a revaluation surplus because the valuation is higher than the carry value. If I calculate the difference there, the revaluation surplus should be 177,547 and 22 cents. So this calculation, I'm just going to put it in a block. And to record this, we're going to say we increase the building by a debit of that amount, 177,547 and 22 cents, and this is a revaluation surplus. And that was all the possible journal entries you could have done in this question as it relates to textile. I hope that you have enjoyed this video, and then I will definitely see you in or hear from you in my other recordings. Keep well until then.